Hi, everybody, welcome back to Ox Talks. Thanks for tuning in to watch the show today. As always, I really appreciate you all supporting the channel, hitting that thumbs up button for me, liking these videos, sharing the videos, please, with folks that you know and care about. If you haven't subscribed, I would humbly ask that you hit the subscribe button so we can keep growing this community. I wanted to do another video today, kind of a follow-on to yesterday's video as to the state of the markets right now in the United States, and that's the stock market, the bond market, the crypto market, just the metals market, just what's going on. And as you know, yesterday we had a huge sell-off in the stock markets, and I will say this, usually, and this is usually from what I experienced, again, I'd love to hear your comments and your thoughts, but the markets take 24 hours to digest usually a Fed action, and usually what is initially a, let's say, outsized reaction to the upside or downside usually gets tempered back a little bit. Okay, so what I would have expected to see is these markets get a bit of a bounce today after that huge sell-off yesterday. Same with cryptos, same with the metals. And I will say that relative to the stock market, that did not happen. I will say that I'm doing this video just at the close, about 15 minutes after the close of the markets. The Dow finished up 15 points. But at one point this morning, I saw the Dow up well over 300 points. The S&P finished in the red, down 5, slightly down, but again, it was up substantially this morning. And the Nasdaq finished also in the red, down about 19 points. But again, Nasdaq this morning, I saw up at one point about 180. Now look, the markets were never, recapturing what they lost yesterday. There was never that kind of fervor out of the gates or at any time today that I saw during the trading session. Okay, there just was not that vote of confidence at all. And to have at the close, just about 10 minutes before the close, there was some news that came out that the U.S. government has come to some ability to once again last minute avoid a government shutdown tomorrow. And the stock market's the market popped a bit. The Dow was up over 200 points. And the last 7 minutes of the trading session, it just lost and lost and lost. And at one point, a few minutes before the close, the Dow Jones also went red. Okay, but they were able to squeak out a green close to say the Dow broke its longest losing streak since 45 or 50 years ago. Again, for those of you that bought this morning thinking that you were going to capture what was lost yesterday, I'd love to hear your thoughts and your thinking process on that. I think this all goes back to, once again, the 10-year yield. The 10-year yield right now is up 7 basis points at 4.57%. And that is not a comfort level that these markets want to see in order to, I think, and again, not as a market expert by any means, but just from a layperson's perspective, observing this stuff for a lot of years and watching other people who are really smart in this sector, when you have this 10-year yield out of control, these markets are going to continue to feel pressure. So again, I bet a lot of market pumpers went out, and that's a wrong word, but let's say proponents went out this morning and bought up things that had been depressed yesterday, and at least as of today, that's not probably not a good. It's not working out, right? Will it work out for you? Who knows? Again, I saw Manarino's report earlier today, and he said he's staying out of the market and staying in cash, and he's going to be allocating a big portion of his cash position into physical silver in the coming weeks. I don't know if you guys caught that this morning. Let's talk about, and by the way, the REITs, the real estate investment trusts, got beat up today across the board. If you guys are in the REITs, let me know. I have some friends that are in the REITs. They like the yield, but they got beat up, and you're going to have this realization that rates moving back towards, marching back towards 5% on the 10-year are not going to be conducive to these people being able to refinance these commercial real estate loans and into lower rates, okay? And I think what you're going to see is a major collapse, continued collapse, accelerated collapse in the real estate and the commercial real estate market going into 2025, especially if you see this 10-year yield spike at 5% or above. And I have no doubt that it's going to probably keep going in that direction. Let's talk about briefly the cryptocurrencies. And they are basically, from what I can tell, in free fall. Now, what I've seen lately, observed, is they do trade in tandem with the market. But even today, when the Dow Jones was at that point in time appeared to be recapturing some of its loss from yesterday, when it was up 300 points, there was not, from what I saw, a corresponding bump in the price of Bitcoin, in the price of Ethereum, or in the price of XRP. As of the time I'm doing this video, Bitcoin is at 96,600. It's down 3.5% again today. I saw it up over 101,000, I believe, earlier today. So it's going in the wrong direction. Ethereum's down to 3,400. I'm showing that 7% down right now on the day. And Ethereum again was 3,800, I believe, earlier in the day. XRP is getting beat up pretty hard. XRP is, as I'm recording the video, I'm showing it at $2.28. Again, it spiked back up yesterday after the close to like 242, might have been even higher than that. So we see a sell-off in cryptocurrencies. If you guys see the connection, if you can, put those two together for me, let me know what your thoughts are. Silver was under some pressure today. The metals markets haven't closed yet, so I don't know where we're sitting at exactly. I saw gold up about $12 before I recorded the video. Silver was down greater this morning, but it came back a little bit, was still down in the red. I mean, again, not financial advice, not trading advice, but silver seems to me right now to be a great buy if you, for all you silver bugs out there, might be time to pick some of that up. Again, it could keep falling. Okay, do your own homework on that and be aware of what the risks are. But gold showing a little bit of a bump. That's very interesting to me. Okay, because usually when the 10-year yields are moving up, that is not supportive for the gold prices. Normally when you see a major move, and a 7 basis point move in the 10-year in a trading day is pretty substantial, folks. Normally the gold price, spot gold, will fall, and we're not seeing that right now. So anyway, I'd love to hear your thoughts and putting that together. What do you think the reasoning behind that is? So anyway, just be careful. I think I responded to someone's comment yesterday to the collapse video. A friend of mine who's heavily in the stock market yesterday lost $93,000. Now, granted, that was on paper. You don't take the loss until you obviously sell the shares. But still, that is psychological, and you had a lot of paper losses, right, in people's portfolios across the world. Folks are in the U.S. markets, and you've got massive losses in the cryptos as well right now. Even losses in metals, right? Everything, when they say, a rising tide, it floats all boats or something, but also goes the other direction as well, right? When the tide's falling, everything sinks sometimes. Then you see what asset classes kind of rise from the ashes first. This is not a curtain call video. I'm not saying that markets are going to keep falling. At some point, you would have to believe that they're going to find a point where they start to go back up. But you have the Fed behind the scenes, and they control a lot of what's going to happen here. So what is the Fed going to do? How will the Fed respond? Right now, it seems to me, I'd love to hear your input. This was a big no confidence vote today for the markets. The expectation that it was going to recapture at least some of what it gave back or lost yesterday simply did not happen. All right, so we can continue to see this thing unfold. Just be careful, and whatever you're doing with your money, again, I said yesterday, it's hard to earn. All right, and there's so many people out there reaching for yield because they're getting beat up with the rates of inflation, with the cost of everything in this country, so they're taking unnecessary risk. A lot of people are, okay? Hopefully you're not one of those, and you're being calculated, and you're doing your own homework. Thanks again for watching. I'll leave it there today. Talk to you all very soon, okay? Bye.